I was at a Korean restaurant with a friend at the time. It was like a Tuesday evening, 6:30. I've been selling insurance for like 6 months, and I got a call from a client saying they had a water leak, a New York City apartment. It was a homeowner's. And I remember the pit I had in my stomach, like, holy shit, is this covered? And, 6 months in, 22, 23 years old. I mean, that's like the number one, type of loss, especially like when it comes to New York City apartments. It was obviously covered, but I didn't know. And I freaked out. At 6 o'clock, I called the president of Rampart, freaking out, saying, is this covered? What do I do? Help me. He's like, Jordan, relax. You'll be fine. We have an in-house claims department.
This is the real estate investing experience. We get it. Real estate can be rough sometimes, and that's why we bring in the experts to talk about the experiences you won't hear anywhere else with your hosts, John Cohen and Chris Grinzik.
What's going on, everybody? Welcome back to another episode of the Real Estate Investing Experience. I'm your host, Chris Grinzik. With me, as always, John Cohen. John, how you doing?
I got no complaints. We got the new board.
Yeah, there we go.
Anyone watching, you'll see that, at first there was no board.
Yeah.
Then we got, not a board, TV. Now we have a TV, and now there's pictures on it. So we're
stepping up in the world.
Stepping up. Absolutely.
And we're pushing people to the YouTube channel now.
Yeah.
Spreading out content.
Exactly.
But awesome. No, we got a slightly different guest on today. We got Jordan Feldman, our insurance guy, does everything for us, handles all our properties. Thought it'd be really interesting to have him on, talk about the insurance side of things, because I definitely don't know as much as I should. So I'm sure I'll have questions for things I probably fuck up all the time. So without going too much into it, Jordan, thanks for joining us.
Of course. I didn't know we can curse. I don't have the TV behind me, so you guys are already
We'll get to it for the next episode.
Thanks for having me. I guess I'll start just 30 seconds on me and how I got to where I am today. I got into the business 5 years ago. I think I met John at a networking group, some BS networking group after work or something. I was always looking to invest in real estate. I'm sure every other kid, I was 22 at the time, 23 at the time, is looking to get into real estate. It's a cool thing to do. I heard John was, raising capital as a firm at Rampart. We insure a lot of real estate. We insure a lot of construction. So it was a good fit. And I think one thing led to another. I became an investor, and here we are at a podcast, and I'm insuring all your properties in the business, and it's good. I've been doing it for 5 years. This year's difficult. We're in a hard market, which I'm sure we'll get to at a later point. I tell John and Chris all the time. I tell you guys all the time that the rates are going up, and there's nothing I can do about it. But that's where I am. I got into the business. I knew someone who knew the president of Rampart, and one thing led to another, and I've been selling insurance for basically my entire professional career.
That's awesome.
That's where I am.
Perfect. Yeah. Let's see. Where should we start? I mean, we'll start right with where you fucking jumped out of the box of insurance is going up, because I think that's interesting.
Yeah.
Can you, I guess we'll get into that, but is there anything over the last, you've been in it now 5 years, you said?
Yeah.
Is there well, first of all, you just do real estate, or you do other types of insurance?
No. So as a firm and myself, we do everything except title insurance. And we have a life department, health department, long-term care department, disability department, but our bread and butter is the property and casualty side. And within that division, we do everything from law firms, restaurants, but our bread and butter within that practice is real estate and construction, primarily New York, but we're in all 50 states. And, depending on the deal and things like that, we'll go overseas. So I'll give you, if you don't mind, I'll give you where we are. I literally call you guys every day telling you rates are probably going up. Because that's what I'm told to do, because it's just like setting the expectations. So I've been in the business 5 years. That's what I do.
We're
right,
laughing because our last two podcasts has been setting expectations for investors, which are clients. So it's funny that you just brought it up, setting expectations for clients. So we won't get into it again, maybe a little bit, but continue. That's why we laughed. So
as you guys are clients, I try and set expectations. So I've been in the business 5 years, but I speak to people that have been doing this for 20, 30, 40 years, and they've really never seen anything like this, primarily due to the catastrophic events going on in the last 2 to 3 years. I mean, the last 10, 15, but really ramped up 2017. So carriers were making money in like 2012, 2013. Rates were actually going down for like 4 or 5 years because carriers were just making money from a real estate standpoint. And then 2017, I think that was a year of like Irma, Harvey. I'm sure the wildfires were pretty active out west. And I think just from a catastrophic loss, carriers paid out about $150 billion
A little bit of money.
That year alone. So that obviously, turned the entire industry upside down. 2018 was better, but not that much better. And this year, they're still losing money, especially where you guys are buying, right? I always tell John all the time, like, can you guys find a location that makes more sense from an insurance standpoint? You guys are buying wood frame in middle of the ocean with aluminum wiring. And listen, I don't mind. It's for a premium, but I'm sure you guys have a hard time budgeting for the insurance on that, especially with what's happening since 2017. So I think this is my stance. It's not Rampart's stance. I think it's going to get a little bit worse before it gets better, but I think just no one really has any idea where it's going from a weather standpoint.
So can I just ask one question real quick and then I'll let you go?
Of course.
Is that just multifamily or is that all real estate?
That's all types of real estate.
Okay.
All types
just
of
wanted to
estate.
clarify for anybody.
So it doesn't matter if it's a warehouse or multifamily or even your house.
Gotcha. Perfect.
So what I let's read in between the lines, which you're not supposed to do, but basically catastrophic events. And, I know we were talking about the other day, we have a lot of coastal properties. So you have all that, but basically the insurance company was able to make so much money and now they got to figure out another way to protect themselves because they typically always win. And to have three big years in a row where they're losing money or paying out money, let's not talk about losing because I'm sure, who knows, but because they haven't been able to fix the system, it affects people like us. Correct.
I think they're doing it now. I think they're trying to correct the system, which is hurting you guys, right?
Yep.
They have to raise their rates. They're a business too, right? They have to show their investors. They have to set expectations for their investors. They have to make money. So when you're paying out $150 billion just from cat losses alone in 1 year, and the years prior to that, you haven't really seen that much. Yeah, it falls to, guys like you. And it doesn't matter where you're buying, right? So you'll see some areas like Jacksonville, right? You guys are very active in Jacksonville. That's, Florida, obviously, and that's right next to the ocean. So some areas of like Florida and the Carolinas, and, we had a big claim in one of your Carolina properties a couple years ago, which we'll get to, I'm sure. You'll see some of those areas going up 30, 40%. I mean, like the rates are going up drastically, but like if you're buying in middle of the country, these carriers are still writing across the board and it's affecting places that aren't necessarily getting hurt from cat losses, right?
Yep.
So if, it's just across the board, New York, Jersey, everywhere.
That's what, and I'm glad you brought that up because I wanted to go in that direction because I know in our business on the multifamily side and the real estate side, brokers are still putting numbers in to sell deals that aren't achievable. And I tell people all the time, it's not, their loss in Florida hurts their books or their loss in California for a fire. It doesn't matter if you're on the coast. It doesn't matter anymore because now they're just taking it out on the country and 100%. Internationally, if you wanted to broaden it. So because of what's happening down there, yeah, your rates are going to go up. But that also is going to affect the middle of the country where nothing happens because, that's going to be their balance to, okay, we're going to lose some money here, but we'll make this one a safe investment, balance out, we win. So, people look at it and say, oh, I'm buying a deal in Nebraska, right? Tornadoes aside and stuff like that. It's like, okay, what's going to happen there? But the insurance companies are looking and say, well, that's a much safer place. Policies are going up everywhere. And, I think people have to be aware of that. And I'm glad you brought it up and it didn't come from us, but anyone listening to this, if you're underwriting any type of real estate, whether it's a single family flip or, a 500,000 square foot industrial portfolio, regardless of location, expect insurance to go up or be more expensive than what it was over the last 5 to 10 years.
I'm happy you touched on that. I'm going to piggy that for a second. What I've seen in my 5 years, like clients just like you, right? I'm not sure how your underwriting works. And I actually want to ask you about that because I feel like you guys underwrite extremely. You guys are a lot more conservative with your deals, which I like.
And we only paid you a little bit of money to say that, so I appreciate it.
I already Venmo requested you. I
got the alert. No.
I forgot what I was saying. You lost me.
We underwrite conservatively.
Yeah. So, when you're looking at a deal, you see the insurance line item. Let's just say it's $250 a door. Most people, what I've seen, they'll put $250 in their line item. There's a lot of reasons why that might not work. It might work, but it might not because one, you don't know how big the seller's portfolio is if it's on a master policy or not. They have a lot more buying power. Like if this is your first property, but they own 5,000 units, obviously their rates are going to be a little bit cheaper than your rates. Two is you don't know what type of insurance they have. They might have exclusions. They might not have a bank. We'll talk about banks because we've had headaches with banks. So there's a lot of reasons why it might not be apples to apples, and why I always suggest calling an insurance broker, just saying, hey, listen, I'm thinking about this property. I probably got on the phone 5 times a week saying, hey, I'm buying this property. Can you give me a ballpark of what it is? I always bump it up a little so I don't look like a jackass when it comes in. I actually look like a hero. John, you said that too, that I always make it worse than it sounds. But I never recommend to copy the seller's premium, because you just don't know what they have. You don't know what their portfolio looks like. You just don't know anything about it. So I always recommend to, call someone to get a better answer than just copying and pasting someone's homework.
So I have a question. If
Yeah.
let's say it was us buying the same deal, how much of a variance in insurance premiums per unit can there be, just based on like your coverage and the different what's the
Master policies?
Well, no, because we would have a master policy, but he's saying like if you compare one group to another, it could be wildly different. How much could it vary depending upon what choices we make? Is it like a 1% difference, or can it be like a
choices you make
25% difference?
Post closing, like what you're going to do?
No, like as
property?
we're going to buy, because we'll talk
So,
about
like,
what's your amount out of pocket, your deductible, your coverage, things like that. We look at different options, and it always is slightly different. There's obviously a big difference for different groups. How big of a difference is it within the same group or person? Depending
Not
on
that much.
Okay.
I mean, listen, most of it, they underwrite the property, right? But they'll
Right.
also underwrite you as owners, right? So because you have a portfolio, right? Let's say you have let's say you have 10 deals, just for easy math, and 9 of them are an absolute shit show from a insurance standpoint. There's fires, there's lawsuits, you guys aren't cleaning up trees that fall. They're going to underwrite you as owners, right? And how you guys manage it, what your experience is, right? So I don't ask you every time when you buy a new property what your experience is, because I know what your experience is. But when we first started, I spent a lot of time with John, help me sell you to the underwriters. Most of it is from a property standpoint. They look at, because of where the market is, we used to be able to get by without showing loss runs from the seller. Now we have to show loss runs from the seller, see what's going on the property, even though it's a completely different owner, even though you might flip the property upside down, it doesn't matter. Most of it's coming from the property standpoint.
Gotcha.
But so to, the subsequent question in my eyes is, you say it all the time, apples to apples. And I when I talk to people, and, some people bring up these crazy ideas to me. And then when you look at, there's a lot of providers out there for insurance. And I think you'd be the first to admit, you're all going more or less to the same group. Some people have a touch more pull or not, but where people, it's like the salesmanship. Jordan, at least for us, it's, I could get your rates for $250, but you're going to have $1 million deductible. You're going to have, no umbrellas. You're never going to get financing. So can you speak to, maybe like the 4 or 5 things that, your premium, what would dictate that going a little bit cheaper, that an owner would have to make a decision, whether it's, terrorism policy, guns, what are the things that buyers
Drive rates.
Yeah, should look at to say, okay, if I do want to save some money on insurance, the level of risk that's going to fall on me, what are those top 3, 4, 5, whatever it may be?
Got it. I'll start with at least just my own experience, right? So I don't own, I rent. So I have renter's insurance, and I think my deductible is like 15% of my personal property limit, which is extremely high. So that's the first thing, deductible. I have 2 types of clients, and there's no right, there's no wrong. I'm not judging anyone. I have a view on it. Some people will put in a claim to make, or not to make, but to coop $5. And then there's people that have insurance for the moments. Like, what do I do? Like, every roof is destroyed. So if you run a clean operation, if the property is clean, I always suggest a higher deductible. Banks have caps on that, right? Some banks don't let you go further than 20 or higher than 25,000 in deductible. But deductible, if the insurance company is willing to offer higher deductibles, and you run a clean operation, and you have the money in the bank, or cash flow will allow for you to do it, I always suggest the higher the deductible, the better. I think you guys are more in that position. I don't think you guys are going after the $1,000 deductibles, $5,000 deductibles. So I always encourage my buyers, if they're comfortable, the higher the better, because you'll be saving money. And I usually break it out for you, right? Like $25,000 deductible is this, 50 is this, and so on. just from a rate standpoint and insurance, you can't really do much. Chris and I were just talking about this, I think, the other day. When it comes to wiring, especially garden style, multifamily, any type of property, aluminum wiring, stay away. Carrier, you limit your carriers to like literally 2. And then there are exclusions, there are $100,000 deductibles. It's a nightmare, especially if you're not doing any work to remediate the aluminum wiring. So I always tell people to try and buy copper. Another thing is construction type, right? Wood frame is probably the cheapest to build. You guys would probably know more about that than me. But that's the most expensive from an insurance standpoint, and the exposure the insurance carriers face from a construction standpoint. So the higher the deductible, putting it on a master policy, buying power, if it makes sense, right? So if you guys have 10 properties and one is just really not performing well from an insurance standpoint, put 9 on the master policy and put that one off by itself and just deal with it. You don't want it to affect the master policy.
So that was going to be my next question, because I know, so just a quick summary. Basically, deductible, type of construction, and wiring are the 3 in our world that, or in any, those are the big ones that are going to have your biggest variance and swings. And the variance may not be location,
right? Jacksonville versus Idaho, there's a big difference. Now,
next part, I know in this business, there are people that are pro master and against master. And I know early on for myself, when you brought it up, I questioned it. I also spoke to people I know, and everyone's like, "No, don't do it." But you just touched on a little bit. But basically, the benefit of the master policy is your buying power. Now, what people may not know, and I think it's important for you to either speak to it. I don't, it's not a super detailed question, but you have 10 properties. You can take a deal off a master and deal with it alone, so it doesn't affect it. But the overall benefit of the master, you should be able to shave some dollars off.
100%.
Why? What's the biggest objection to a master policy from my standpoint coming to you? When someone asks you, I heard this is a bad idea, what do you tell them?
I ask them why do they think it's a bad idea, and usually they'll say, you have different investors for different deals. But I can't speak for other insurance brokers and what their process looks like. So that's why I say there really is no downside to a master policy. If ownership's the same, or the people syndicating is the same, there really is no downside with our process, because on every renewal, we're looking at every property to see how it's performing and how it's affecting the insurance premiums. And we'll have it broken down by line item. So property, the liability, the umbrella, if there's auto, if there's workers' comp, by property. So like what I said, if you have one deal out of 10 that is just doing an absolutely horrible job, we'll quote it both ways. We'll see what it costs on the master and how it affects the rates with the other 9 properties. And we'll quote it by itself and see how it looks by itself and what that does to the other 9 properties. So there's really, I really can't think of a big reason why you wouldn't put it on a master. People like yourselves.
There you go.
And you're buying in the same area, right? Like if you have 25 properties in New York City, as an example, and 1 in South Beach, Miami, it might not make sense to have all of those properties on the same. You'll have your New York City properties, and then you'll have your Florida properties or your South Beach properties. And same with type of, right? So garden style, like if most of your things are apartments, you have student housing, right? That would never go on your master because that would affect everything with your master. So it's also the type of property. You could have your own student housing master, but you wouldn't mix and match student housing with your typical garden style rental units.
So if you had a bunch of single families and then you went to go buy a multifamily or an industrial, would not go on this. You wouldn't recommend master policy, right?
On your size, no. It's case by case, right? If it's all in the same neighborhood, same zip code, maybe if the carrier is willing to do it, but at the end of the day, probably not. But student housing is obviously a lot different than your primary business from just the exposure standpoint and who's in the unit itself.
Yeah, and then I think one of the things I always thought about, and you kind of touched on it, was when you get a master's, if you do have bad performing ones, they affect the ones that are performing well. And you touched on removing some from that. Why would insurance carriers be okay with you removing the bad ones from the master and pushing it off to the side? And wouldn't that affect that one overly more so than the other ones? And you might want to keep it in to help that one up.
That's what we do at Rampart. We'll quote it both ways to see what the rates look like for all 10 properties. I'm just saying 10 properties. I know you guys don't.
Yeah, no, for sure.
So we'll see what it looks like. underwriters and the insurance companies don't really have a say on what goes in what policy. You could just say that investor 3 or some of your investors in property 3 don't want this on a master policy. And that's enough reason to not put it on a master policy. You guys are making the calls at the end of the day in regards to what's being grouped with what, as long as it meets the requirements of the insurance company, right? You can't have different ownership, like different majority ownership on the same master policy typically. So they do have some requirements, but for the most part, it's your call where you want to put what and for what reason.
Gotcha. So you're saying like if John was Toro and I had a company called ABC Company, we couldn't join forces to combine some of ours for a master policy. That's what you mean by that, right?
You couldn't create an entity for the sole purpose of insurance, correct?
There's always a workaround.
So that was something that someone brought up to me.
Yeah, no, I know.
And I literally forwarded it to Jordan. I was like, yo, tell me how wrong and bad this is. And he's like, yeah, this is just there's nothing about this that's okay.
And also, like, especially if you're dealing with 2 different operators, like you guys work at the same company, right?
Yeah.
So if you just wanted to do something on your own, Chris, as an example, with like family and friends, and you wanted to put it under Toro's umbrella or roof, and John was okay with it, fine, sure. But if you're dealing with someone, let's say, who lives in California and just someone you met, or right, whatever, you have no idea how they run their business. Forget that it might not be legal. Their properties will affect your rates. They might have 50, fires a week. They might have lawsuits that are in the 7-8 figures. I would strongly, as I told John, strongly recommend against that.
Yeah, it's funny because, like you said, the legality alone, right? Yeah. Don't do it. But then if you do want to do it, you got to remember that they're buying D-class properties, or they're buying A-class properties where literally buildings are burning to the ground. Your rates are going to get messed up. So it's just, there wasn't a scenario when I brought it up to the group. When they brought it up to my attention, I literally called Jordan and I put my best foot forward, because I'm going to ask you a question next. But when I told them they were doing something that they shouldn't do, they looked at me like, yeah, you don't know what you're talking about. And I'm like, guys, I don't even know one deal you own, let alone how you operate. Forget the legality side of it. It's comical on, the things that people will do to save a penny.
Yeah. I think when you think about it from a big picture, the negatives definitely outweigh the benefits. But the thought process is, hey, if I don't have enough to get a big master policy, the same way we go out and raise money to buy bigger properties, hey, let's join forces to get a master. So the thought process makes sense. Just when you actually dig a little deeper, it's like, okay, that's not really the route you want to go.
I get it. Yeah, exactly. I just don't think people really think too much into it. It's just an idea that pops into a head. They ask someone asks an insurance broker. I'm sure you'll have insurance brokers that say, yeah, of course we'll do it just because they want the business. But, we do things by the books. We don't cut corners. So I advise against it.
So let me ask you, this is my favorite question, because, I was in the car yesterday. We were driving mobile home parks, and, one of the girls that works here was with me, and she said, why do you use a mortgage broker? Why do you use, I didn't know you use a mortgage broker. Why don't you just contact banks directly? Or the next question is, why do you use a broker to sell? Why don't you just sell the deal yourself? Or why don't you buy the deal? Why use this? So the question that always gets proposed, and the insurance world's a little different. I don't think I could just call up the underwriter and say, hey, give me a policy. I don't think it works that way.
You can't.
But then they say, why use an insurance broker? And then the next question that follows that is, what's the difference between Rampart and Jordan and insurance broker X and whoever they're going to go to? Can you speak to that a little bit and maybe educate people on the insurance side? Because before he answers that, we had a local in-house or in-state Florida insurance guy that literally looked at what we were doing with Jordan, and he was like, yeah, I can't beat that. That's fantastic. And I think that goes to, the level of service that we get from Jordan. And, people, I want to use an insurance broker in Florida. I want to use an insurance broker here. Can you speak to, like I said, all those answers, all those questions, I'll let you take it from here.
How many states are you in? Properties?
6. That was scripted. That was scripted, by the way. I kicked him under the table.
You have a big sign. You have a big sign behind
you. You can't see it, but there's a big sign behind his head that way.
We're in all 52 states. You're going to use 6 local brokers based on that, right? So you want to use a broker, especially in your type of business and how spread out you guys are, that has access to those 6 states, all 50 states, because you don't want to call 6 local brokers. That takes away from the master policy. So When I got to Rampart, I'll tell you why I think Rampart is, very good at what we do. One, we've been in business almost 55 years, if not more. We have 200 employees and a sales team of 20. So service is what we pride ourselves on. Secondly is, I remember I was 22, 23. I will never forget this. I was at a Korean restaurant with a friend at the time. It was like a Tuesday evening, 6:30. I've been selling insurance for like 6 months, and I got a call from a client saying they had a water leak, a New York City apartment. It was a homeowner's. And I remember the pit I had in my stomach, like, holy shit, is this covered? And, 6 months in, 22, 23 years old. I mean, that's like the number one, type of loss, especially like when it comes to New York City apartments. It was obviously covered, but I didn't know. And I freaked out. At 6 o'clock, I called the president of Rampart, freaking out, saying, is this covered? What do I do? Help me. He's like, Jordan, relax. You'll be fine. We have an in-house claims department. So to answer your question, the reason I say that is I will never forget that feeling, and I will never sell a policy that I don't think has the right coverage. There are a lot of brokers out there, not everyone, but there are a good amount of brokers out there that will sell you an insurance policy to collect their premium, to collect their commission, and move on to the next one. I am more about relationship. I rather sell you something that is 2 times as more expensive than what you're seeing on the street with the right coverage. If you decide to take it, great. If not, you want to cut corners, that's up to you. I won't lose sleep at night. I tell people all the time, I don't sell insurance. I buy insurance for my clients. That's my tagline. So to compare ourselves, we're not recognized as a national broker, but we're pretty big. We have 200 employees, like I said. We have footprints across the states, and depending on the size, across the world. So we know what we're doing, especially when it comes to real estate and construction. You name a program, you name a carrier, I am 99% sure, if not 100% sure, we have access to them, and we have great relationships with them. We have in-house legal. I would assume most brokers, especially local brokers, don't have in-house legal. We have a claims department of 5 to 10 people. I know you guys deal with a couple of ladies. I'm sure it probably goes through me. All they do all day, every day is deal with claims, hold your hand, make sure we get paid, make sure you get paid on time. We're big enough to service you, but at the same time, small enough to know who you are. That I stole from, I think, the president of Rampart as well. So I think that's what kind of makes us different. We're in a unique place. We're not too big where you're just another client, but we're really big enough to negotiate with carriers, due to our book size and our experience. So I think that's really what separates us from the smaller shops as well as the bigger shops out there.
So what I love about, working with Jordan and his team is not just everything he said, because I couldn't have said it better, and nor would I even try, but we had a disaster deal closing in Columbus, Ohio, 2 months ago.
I lost 5 years off my life because of this.
I
want to make sure everyone is aware of that.
And it possibly could not have gone any worse at the end of the day. Jordan literally called me with either the president or super high top of the line guy. And they basically got on the phone and said, we're going to get it done. I'm doing everything and I'm pulling all the strings that I know from every single carrier in the business. So, I don't necessarily know if you get that with, Mr. Jones Insurance in, Cleveland, Ohio. I'm not saying you won't, but the amount of pull and confidence that we had to get that to the finish line. And in the end, it wasn't insurance at all. It was the bank. But we were able to get very, very difficult things done by getting on a call with the bank, getting on a call with the insurance, everybody got on an all hands on deck call, 24 hours before closing when things were just absolutely out of control. So that's something that, he doesn't want to lose sleep at night over a water leak in Manhattan. Well, 360 units, that were just disaster. That's something that I could, stand behind and say, without that, I don't necessarily know where we would have got that comfort it was going to get done.
Yeah,
now I'll Venmo you because I probably paid you for that.
Yeah, I think it goes back to a lot of things. You got to understand what type of group or person you're looking to work with, whether it's insurance, mortgage broker, commercial broker, any sort of different partnership. So I think, especially in our space, I think that's hugely important, and it's important for us as well.
I want to touch on that when you're done from an investment standpoint. So I don't think you guys try and understand insurance. I think you guys rely on me to explain or buy insurance for you guys. So I was actually just talking to a couple of people. I've always wanted to invest in real estate, but I don't know markets. I don't know anything. So I bet on the people raising the capital. So I know a million guys like you, but you guys And I have a follow-up question is what your underwriting looks like, because I've always been curious. I don't know if you have a secret sauce or not, because the deals I've been in, and I'll request money because you probably paid me to say this as well. I don't even know what the returns are. They're like, they're almost like too good to be true. Even the deals we've sold. So I don't try and understand real estate. I just try to make sure that you guys have a clean operation. You guys aren't cutting corners. You guys have the experience. So what is it about you guys that's different from every other person on the block raising capital for real estate? I don't know if you guys have a secret sauce or not, but can you touch on it?
So I think the biggest thing that we've got, and it has nothing to do with, we underwrite better. We're all using the same metrics, right? We're all finding the same ways to find deals. Maybe it's an extra call, or it's a relationship where a deal comes free, or our ability to work with very messed up sellers and very, very difficult deals to get to the finish line. Taking that all off the table, unanimously, I think we've heard from the majority of people is that, I'm not going to work in a 3-piece suit trying to be a used car salesman. I'm basically
hold on 1 second.
Chris and Don and everybody in our office, we're presenting opportunities to people that we feel can make a difference to our investors, whether they're super high net worth individuals or whether they're just Mr. Jones and his 25,000 or 50 grand. We are presenting deals that we feel will make an impact to them, whether it's a 2% return or a 500% return. We feel that what we're delivering is something that we truly believe in. Not only do we invest in all our deals, like a lot of other groups don't put a penny into their own deals, we do put our money where our mouth is. And, we're typically a lion's share of the capital. So it's not, that's what we've done in the past. I'm not saying it's always going to be like that because we have a certain amount of capital, but I think, that's the one thing that I can speak to. I don't know, you could disagree or agree, but it's the real component of just delivering the information and saying, hey, if you like it, you like it. If not, we get it. Maybe the next one's for you.
No, I think yes, but to a certain degree, I'm a little bit more pessimistic. I think people are motivated for themselves more than other people. As much as we like to consider our investors and do the right thing, it's also, selfishly, we want to invest in deals that are going to be good for us. And if they're good for us, they're probably good for other people. More often than not, it's a fight of how can we get more of our own money into the deals.
Yes.
And, I'll just speak very frankly. I sometimes think they spend too much money investing in deals than on the business itself, but that's fine. It's not the end of the world because at the end of the day, in our opinion, they are good deals. So you're going to want to put as much money as put as much money as you can into the deals. And at the end of the day, you got to pick and choose where to put money. So, I think we just stand behind what we're putting out there, good, bad, or indifferent.
Mm-hmm.
Yeah. I think that was one of my first questions when, the relationship was me as an investor, you syndicating, John, was, are you putting money in? Because just as an investor, especially I was 23 at the time. I think when I put in literally a couple of dollars into a deal to make sure you didn't go to Vegas with it. I remember we met in Roslyn for coffee. Yep. Are you putting money in? Because I think that's very important for someone who's, I don't want to say a scared investor, just an uneducated investor. Is like, listen, if you guys are putting your money in, I think that says everything I need to know about the type of underwriting you guys do, the type of deals that just what you guys believe in, the type of deals that you guys believe in. So that was, if you said no, I wasn't putting money in, I was probably going to do it. All right, that's
And the other thing I think, not from the insurance standpoint, Jordan's writing our policies, or at least presenting us with the options to pick. Jordan's also investing in the deals. So it's not, I'm not saying that every insurance broker has to do that or every sponsor should ask them to do that. I've never asked Jordan, hey, I'll let you write this policy if you invest in it.
That would be illegal.
That's how we won the business.
Yeah. It's like, okay, you put your money in and I'll give you the business. No. It was Jordan's own, hey, I like what you're doing. Can I invest? And I was like, yeah, sure. If it makes sense for you, go for it. But, if the insurance broker's not, it's like, property managers or brokers, hey, fine. You know what? I'll do this deal. Will you buy it? Will you put your money in? Oh, well, wait a second. It's like the same thing. I don't think Jordan would want to write a policy on a deal. If I asked him to put his money, he said no. And then he's going to say, oh, by the way, sign this insurance document. I'd be a little leery that maybe he doesn't believe in it as much. And now Jordan doesn't invest in every deal. And it's not because he wants to or he doesn't want to. It's just, we do a couple deals and it's just the right situation at the right time. But, that's putting your money where your mouth is. And we believe in that. And that's something that, I appreciate you saying, okay, they're doing it. It's good. And you say, we're believing in what we're putting out there. And I think any of your service providers should believe in it. And they don't have to write a check, but they should believe in whatever they're giving you. Because if they're not, there's a clear problem there. They're selling something for their own benefit and their own capitalization, which is fine. That's America, right? You capitalize on whatever 100%. You can. But
but what makes the world go around, right?
Exactly. But putting your money where your mouth is important.
I would never sell you an insurance policy that I didn't believe in because of that feeling I had in that Korean barbecue restaurant. I never want to feel that. And we've had some pretty large claims that we paid out of.
We had a claim in Wilmington on a deal. It was like $1.6 million or $1.4 million. It was a massive claim. Yeah, due to our and now I'll pat Jordan on the back again. We had a deductible choice for that deal. We took the higher deductible. We had a chance to do it was like $50,000 or $100,000 or $50,000 or $90,000, whatever it was. And at the time, let's take the $90,000 deductible. Luckily, the claim was significantly more than that.
Exactly why.
But that was a decision we made, and it didn't kick us in the ass.
That's going to be loud.
That's going to be very loud. But that was a decision that we made. Now, that ended up working out for the fund, but it was $1.4 million claim. If it would have been a $400,000 claim, that would have sucked.
Well, I remember specifically that deal. That was the second thing I went to. Did we offer different deductible options? I remember the communication we had was, if you're having it was a wind and hail claim. If you're going to have that, it's not going to be $20,000. It's going to be a pretty significant deal, or significant loss. So what's 90,000 to 1.6? Obviously, you would rather have a $50,000 deductible, but 90,000 when you're getting paid 1 point whatever, you guys aren't thinking too much about the deductible option.
Correct, but that was one instance where he put something in front of us. He gave us the options. His recommendation was one. We took the other one, and we paid for it, but we got paid for it, so it wasn't the end of the world. But those are little decisions that even we're renewing a policy right now. And I owe Jordan an answer by tomorrow for our deal in Jacksonville.
I'm thinking.
And on that deal alone, we have a couple of options on the table. And I literally have to weigh out what my risk tolerance is because it's a deal we're getting ready to sell.
It's a unique situation because of the timeline.
We're going to get tons of calls now.
Yeah, exactly. Everyone's saying, I'll buy the deal, buy the deal, buy the deal. No, it's a deal we're looking to sell. And the options on the table there are some questions that, let's call a spade, probably won't happen. Now, those are the immortal words. I'll take the higher policy.
I am not saying that on record. I will not say that.
But there are things. Yeah, there are things there that I really have to think about. But at the same time, I've typically always leaned to being, I'd rather be protected because one, I have investors in deals. The last thing I want to do is call investors and say, we're short cash flow. We have no money. By the way, we have a $200,000 deductible. Pony up the money, or we're sitting there with vacancy. Yeah. So those are decisions that I make, but these are things that Jordan and his team put together for us on, we have a lot of things going on. So, they also have their calendar. I don't have to ever remember when my insurance is coming due. They're ahead of it, on top of it every single time. They work well with the banks. They work well with our brokers. We
try to with the banks.
Everybody is getting along, and having that team member is super important. So it's just something to think about anytime someone's going to, insurance well, because it's a horse of another color. We don't, I typically don't ask what's covered under my firearms policy because, I lean on our broker for that. And, I didn't do every deal.
You still owe me an application on that.
There you go.
I sent you that.
So it's little things like that are super important to this business because, one wrong thing is going to cost you a lot of money.
Sure.
You see it all the time.
Change gears a little bit because I think it's important for somebody that is, looking to get into real estate and find an insurance broker, or somebody that has one and maybe isn't happy. What are some questions they should be asking their broker or brokers they're interviewing to get to a level that they're comfort to work with them?
Excellent question.
Well, we kind of just went over this with one of the conference calls we had, what their book of business looks like and their experience looks like within the real estate, market. How much, how many carriers do they have? What programs do they have access to? Now, it might be hard to receive those answers, someone in your position, because you guys aren't, typically really educated on what programs and what markets, but you can bounce that off someone else, another broker. Find out how big the company is, find out what they would recommend, see if they are offering different options. I think a lot has to do with your experience and knowledge. And when I say experience, I think that kind of goes to your relationships as a broker to the carrier. A large part of our success is the great relationships we have with our carriers. I
Mhm.
can't say that for every other broker. Obviously, we're not the only broker on the block that has great relationships. There's thousands and thousands of brokers. There's plenty of brokers that have great relationships. But I think one that separates a good broker from a bad broker, and I'm not even saying Rampart, is their relationship with their carrier, and also what their underwriting process looks like. The back and forth we have with these Excel sheets, and we do our own internal underwriting. I would say most brokers don't do that. Probably a good amount of brokers probably collect the information and pass it along to the actual underwriter and let them quote. We're asking questions. This doesn't make sense. Chris, we were just dealing with it with the square footage.
Yeah.
Something didn't make sense. There was a minor error, whatever, or the rents, right? It was like monthly. It wasn't annual. We look at everything. We're looking at all the line items. We have teams in place depending on the size of the account, and your account is deserving of a team where you get, account executive, you get me. If we need a principal on the phone, the principal will get on the phone. You have the claims department. We're all talking together on renewals, on new purchases. So I think process, the experience they have with the carriers within the real estate and construction industry, I think that goes a long way on when to decide what broker you should use. Just because someone's offering you the cheapest rates, what I say a lot in this business is you get what you pay for. And there's people, and listen, their business model, they'll deal with the, not having the insurance if there's a claim and they want to gamble. I don't think you guys are gambling with your properties and your investors. So it really depends what you're looking for. If you're looking for the service, if you're looking for good product at a competitive rate, Rampart's, I think we're good at doing that.
I got two questions. One's an easy one. One's a hard one. Or one's an ask for anyone listening or just in general. Will you be willing to look at a current policy and look at it and say, I think you're exposed here, 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 and here? What I think it should look like. Would you audit someone's insurance so they know where they're exposed and if you could beat it, or hey, listen, we get you the same coverage for cheaper, or we'll get you better coverage for the same cost? What would you be willing to do that for people?
I do that 20 times a week, and 19 of the 20, I know going in that there's no business for me. Someone will call me and say, how do I save $10 on this policy? I'll be like, here's how you save $20, but I'm not selling you this policy. I have other people that call me and say, hey, listen, can you just tell me where we are? I have a great relationship. And I don't try and find mistakes. There's enough things that come across my desk where there's mistakes and there's red flags where I should be acting on it. If someone has like a minor tweak, or they should maybe raise this deductible, or if they have this exclusion, do this, I do that 20 times a week. And I honestly don't expect anything, because most of that is coming from clients like Ray. I think you just introduced me to someone who was looking at their first property. And I don't think he bought anything, or he didn't tell me at least yet. He just wanted to have a 20-minute conversation, what the insurance looked like, what the process looked like, what he should look for. I spent 20 minutes on the phone with him. I'm doing that, be honest with you, for selfish reasons, right? Because when he wants to buy, or when it becomes big like Toro, he's going to remember that phone call. So I do that all day, every day. I encourage people to give me a call and kind of treat me as a consultant more than a broker. That's where I get my business from.
That's
it's
a super important
relationship.
Absolutely. Having someone you can go to for advice, it's the long game. I say it all the time. Real estate and any relationship with a broker, at least a good one, everyone wants to make a call, get a deal, close the deal, get some money. But in the realistic event, it's, hey, I want to be there through the bad times and the good times. When they make that decision, you're there. So obviously anyone listening, use Jordan for that resource. He'll listen, he'll look at it, and he'll tell you what he thinks if you want his opinion, or just if you want to educate yourself in the process. Here's the hard question. You work with a broker.
That was the hard question. Ooh, okay.
You work with a broker for 5 years, whatever. How do you keep your broker honest to make sure he's doing a good job and you're not overpaying without, because I know in the insurance world, if I go to a different broker, I say, hey, can you bid this out? And he goes to a carrier, it could lock you out. So how do you maintain a relationship without being, how do you keep the broker honest without telling him, hey, I'm going to shop this out to see if you're doing a good job? Because no one wants to hear that, but it's the inevitable side of the business. How do you handle those situations, or how do you recommend
What are you trying to tell me, John? 5 years? Well, listen, we just had a deal. I'll answer your question. But I tell people all the time, listen, like, let's talk about it. I'll work with you if you want to work with another broker. That way it doesn't hurt you, and I'll explain what I mean by that. I advised or recommended that we get another broker on the phone on that specific deal. I won't mention names where it kind of blew up a little bit. And he said, there's nothing I can do. I recommended that because I'm confident in what we do and with our relationships that really there's not a lot out there that's going to beat us. That being said, when you want to shop a broker or keep your broker honest, it is very important for your own sake to make sure that you're doing it in a strategic way. You don't want 4 brokers going to the same carrier or to the same underwriter, because if that happens, the underwriter's not going to take it seriously. They're going to be like, what are the chances I get this? Whose account is this? So it's very important if you're shopping. Listen, I have people that shop me every year. Do I recommend it? No. And that's not really an ideal client for me, but 3-5 years, I think it's good to see what's out there, see if you're getting the best buck for the right apples to apples coverage. Make sure you have, hey, listen, the broker you've been doing business with for 5 years, ask for a list of insurance carriers that they're going to, and then you can send that list to someone else. Like, hey, listen, do you have anyone else in mind that you think you might be able to go to? You just don't want the same underwriter getting 3 submissions from 3 different brokers, because
Exactly.
it'll hurt you in the long run.
And so I love that. So one of the first deals we ever did, I have an extremely good friend, a partner and an investor in a lot of our deals, and doesn't believe anything anyone says. So Jordan was doing our insurance, and he took it and he went to like 15 different people. Then we started getting calls like locked out. And Jordan and this individual who he'll definitely be on the podcast at some point. They were like, yo, what the fuck, guys? Like they got, I don't want to say they got into it, but I sat them next to each other at my wedding just for fun. But
that was fun. Well, we got along. It's fine.
No, and now it's funny. I actually sent them
a couple drinks.
A couple drinks, and everyone's fine. But I just sent him the new policy. I was like, yo, and now he won't do it at all. But to Jordan's point, there was a deal where he did that. We got on the phone with another broker, and the broker basically said I couldn't do anything. Now, what no one knows is after that call, he called me. He's like, I could definitely do better. And I was like, that's the type of person you are? Come on. Come on.
I'm very honest, yeah.
But, if you're going to put yourself out there, don't lie or try and skirt around it. I didn't like that, but, nothing happened. I told him, I was like, hey, listen, like, you're going to lie to my face.
He came up with numbers without us even giving the premium. And then we gave him the premium. He's like, yeah, that's in line with what I just said.
Exactly. So it's just, but that's a good point. Obviously, anyone listening, it's a business. Everyone knows that, but don't be honest and upfront with whoever you're advised. And it doesn't have to just be on the insurance side, but if you do go the way around someone's back, they're going to get locked out. They're going to know about it. So you might as well just be upfront. That's why I wanted to ask the question, because I want everyone to realize the insurance world. I want them to understand how the business works, because some people think that, a broker is going to have a different relationship here or there, but it's, everyone's going to the same people for the most part. There'll be 1 or 2 occasions here. So if you get a list from your current broker and say, hey, give it to a new guy, say, hey, I wouldn't go to anyone else. You're in good hands.
Yeah, I'm very honest too. Whether you believe that or not, I'll leave that up to you guys, right? I'm sure everyone thinks they're honest, but you guys send me deals. I think I don't know if you closed on it because it wasn't something that I was really interested in from an investment standpoint, and I wasn't interested in from an insurance broker standpoint. It was a couple of smaller deals. It wasn't, I forgot what it was, like the lots or whatever for the RVs or whatever. I don't know.
The mobile home park.
I just said, listen, we don't have experience. I'm not going to be able to help you here. If you want to send me what you have, I'll take a look and I'll be your advisor, but I'm not your guy for this. I'm just very honest. I don't want to waste your time. I definitely don't want to waste my time or the employees at Rampart. I don't want to waste their time. So we're good at real estate. We're good at construction for the most part, right? If you're doing lots for RVs, we just don't have experience. Like, we're not good at with moving companies. I had a great opportunity, one of the largest moving companies. We just don't have the markets for it. I'm not wasting anyone's time. Like, you're good where you are. I would love the business, but I'm not going to be able to beat anything that you have.
That's important. And then I know I'm not that much older.
I have a question after this question.
Then Jordan, I'm 5 or 6 years old or whatever it is, but I remember when we met at the networking event, I literally came back to my partner here at Toro, and I was like, I got our insurance guy, because I had other recommendations from people in the business, but I was like, he's young and hungry, and I want that guy going to bat. I want a guy that's going to tell me what I need to hear, good or bad, and I want that guy going to bat. So I think that's important. And hearing it, people can't, I can't read it enough, whether it's Jordan, whether it's somebody else, whether it's a complete stranger, make sure you're all on the same page and you're all moving towards the same goal, because that's the most important part about that relationship. But that's my 2 cents.
I
What are you going to say?
think you kind of answered, but two quick questions. One, I'm trying to ask more people. What do you look for? I hate to use the word vendors. I'll use vendors or partners. What do you look for in your insurance broker, your mortgage brokers? You kind of just touched on it. I don't know if you have anything else to add, but like, is it more about just being upfront and honest? Is it the experience, the knowledge? Is it strictly price? What do you like when you guys are dealing with vendors and shopping things, or when you started out? What was like the priorities for you from selecting your vendors? That's
So
question one.
Yeah, people think I'm crazy. And this is how I buy deals. This is how I take investor dollars. I meet somebody. My wife says it all the time. She's, and it's like, wow, you were right about that person. You were right about that. If I meet someone and I get an instinct and I like them, I'm doing it. Now pending pricing doesn't go completely crazy, but I am not a guy that's, hounding someone down for every single nickel. I don't believe in it. I think you get what you get what you get for a reason. So I gotta get along with you. It wasn't the 3 or 4 shots we had at that networking event and we had a good time. That had nothing to do with it, but I'm a very big believer. I mean, even we brought Chris on, his mom was an investor of ours and we have that story, but I have to have a feeling that this is someone I want to do business with. Then I let the rest fall in place. And if I have trust and confidence in that individual, I see hard work, I'm willing to give a younger guy or a newer guy, I'm willing to give that guy a shot or that girl a shot, as long as I can sense that it's what, they believe in and they're going to do the best they can. That's, it has nothing to do with pricing. And, that stuff comes down the road in a relationship. But for me, you could say something different. I got to get that feeling that it's going to work. And if the relationship's going to work, it's going to work. If it's not going to work, I'm going to know really early on and I'm going to end it.
Yeah. I think one thing that was important for me was because coming into it 3 years ago, knew nothing. I think it's someone that's willing to take the time to, one, upfront, honest, and good relationship, of course, but just taking the time to be able to explain stuff as I don't know it and not like, oh, like, why the fuck don't you know that? That was hugely important for me. And I'm sure it's important for a lot of people because there's a lot of fucking things to know when you're buying and investing in real estate, even if it's just by yourself. Forget adding in investors and documents and that whole shit. If you've got somebody that can help you along that path, educate and guide and, not bullshit you like you were talking about, Jordan, just to make a buck and move on. For me, that's hugely important because that information is only going to benefit our investors as we continue to go forward, because I'm learning from someone that's in it day to day. Just like you were talking about, you don't know, our side of the business. I don't really know your side of the business. And I'm only continuing to learn as, we go through more and more deals and we talk more and meet and have conversations like this. I would never sit down, if there's a brand new investor said, hey, how does insurance work? I'd say, here's Jordan's number. Like, fuck if I know. Like, we rely on you and having that confidence. And then any questions I have, being able to, whether it's just taking the time or the ability to explain and educate on that, is very important for me.
Absolutely. That's super important. I mean, you got to understand the question you're trying to get answered, and you got to find the person who's going to give you the answers you need. Because without those answers, you're just going through the dark, going like this, which it's extremely difficult. So, there's a sense of feeling that you have to have. I get it at properties. I terminate property. I was driving a mobile home park yesterday. I drove it and I literally texted, a friend of mine today. I was like, I'm so torn. I know this deal is going to make money, but I just don't know. But I have that good feeling, but I also have some, I'm not sure. But so it's tough, but that feeling is important. And having someone that's going to spend the education hours, because that's a lot of money out of someone's pocket, giving people a lot of answers and a lot of questions. Yep. What was your other question?
Second question is, I don't know how we're doing on time. This might be a good way to wrap it up. I don't know how we're doing now. So I spoke about the insurance market, where we were, where we are, and where we're going. Where's the real estate market going? There's a lot of rumors out there. A lot of New York City or New York market rumors. Where do you guys see the market, especially the markets that you're in and that you guys are interested in? Like, what's the next 5-10 years look like, if you can answer?
Yeah, so I would say the diplomatic answer is, I could easily make an argument that it's going to go for another 10 years. But my personal opinion, I'm the most negative one. I've said this basically at some point during every podcast. People are probably getting sick of it. I'm negative. I've always been negative. I personally believe where we're at, I've said this for 5 years and I've been wrong, so take it with a grain of salt. But I think that we are closer to the top than the bottom. I don't think it doesn't take a genius to say that. But where we can lock in longer-term deals to protect against the debt world, because I do think that we are in a little bit of a financial instability. I think that, with the current president is going through his problems. Who has any idea who's going to be the next president? The lowering of the rates and the artificial way to sort of make things look good. And we've been running for so long. I think we're closer to top than the bottom. But one article I read yesterday showed that I think other countries they've already been in a recession and they're starting to show signs of coming out of a recession, while the United States has just plowed through that. So typically the world doesn't end at once and markets go up and down, but there's very strong indicators. I think UBS put the report out that the United States just plowed through global recession, and now the other economies are starting to show signs of coming out, and the United States just gone up. So that's a very good sign that we could continue to run. But there's also the other sides, like Ray Dalio, who's a negative guy. He's said that 2020, the last quarter of 2020, recession. Mm-hmm. So be prepared.
I heard that about the last quarter of 2019.
Yeah. So there you go. But
right. Like if anyone knew, right, they would be.
But the one
you wouldn't be on the podcast right now.
Exactly. The one common factor I can say, and it would be a good way to wrap it up. When we buy deals, we're very confident in the long term.
That's what I was going to ask you, how you protect it, how you're protecting yourself against that.
Yeah, we're buying deals at very good bases with very attractive rents in markets that we personally believe that if the world were to end, our rental market and the tenants that live in our properties are a little protected. So our rents are not $1,500 Class A or $2,000 Class A. We're also not $500 D class. We are C plus, B minus, where if the world ends, C plus still is going to work. I believe that. So I think that we're protecting ourselves by making the necessary long-term capital improvements, buying deals at very good prices, and putting the right debt on properties. So if something goes wrong, we'll be able to refinance, we'll be able to recapitalize, or we can hold it for 10 years so we don't have to worry. That's what we do. But it's an interesting world. It's a day-to-day conversation that we focus on all the time, and we're always tweaking what we're trying to do and how we can be competitive.
Yeah, I think the only thing I would add to that before we wrap it up is I don't think any of us are sitting here saying real estate is going to be the best investment through any sort of softening, flattening, downturn, whatever, but it's probably going to be better than most from a capital preservation standpoint and a return standpoint. And then what I think we're adding on top of that is I also think we're positioning ourselves a little bit better and a little bit less risky than most of the people in the real estate industry as well. So we're never going to be the top returning properties. We're never going to be the top returning asset, but I think we'll probably be better than a lot of operators. And I think we'll probably be better than a lot of other investments in the next 5 years. So
I agree.
What's that worth? I don't know, but that's how we feel, or how I feel at least.
No, I agree.
But yeah, I think that's an awesome place to wrap up. Jordan, thank you so much for coming on. I think you gave a ton of insight into the insurance world and also asked us a couple of great questions. If anybody wants to get in touch with you, whether just to ask questions or, potentially have you look at some stuff, what's the best way to get in touch with you?
Phone number. I don't know if you want me to say it over.
Yeah, no, absolutely.
Yeah. My cell, 516-319-7658. You can call me on the weekends. You can call me at 4:00 in the morning. I'll pick up unless I'm on the phone with Toro, then I will not pick up. But yeah, cell phone is the best way to get a hold of me. If you have a serious matter, if you have a quick question, if you just had an opinion about something, cell is the best way to get a hold of me.
Fantastic. We'll put that in the show notes. I can honestly say, not only Jordan a good friend and he's a great investor of ours, but from taking that component out of it, he's done a fantastic job with our insurance. I mean, I know I've introduced him to a lot of people and they've called me as well. So I could say that honestly. We are shopping him on a daily basis without telling him. So,
but no, you're probably going to ask for that list that I'm going.
Awesome guy, guys. Use him as a resource. For anyone listening to this, he's a vital part of the business. And like you said, whether it's industrial warehouse or whatever, ask him a question. He's wealth of information as well as his team.
Awesome.
I appreciate it. Thanks guys.
Thank you.
Appreciate it.